Yo, Marcus Gaber here. In this video, we're going to talk about my Bitcoin experience, the lessons that I learned with Bitcoin, and why I used some of my learnings to implement them with Hyliion stock and other stocks as well. And keep in mind that none of this is financial advice. This is just some random guy on YouTube drawing some stick figure lines on a chart talking to you guys. And if you want to support this channel, smashing that like button goes a long way. And also, if you're interested, feel free to check out my wife's Etsy shop. She makes these handcrafted beeswax lotion bars. They're really great for moisturizing your skin, and they make really good holiday gifts. Let's get into this. So we're going to start talking about Bitcoin and talk a little bit about my mistakes I've made in the past, what I learned from those mistakes, and what can we actually learn when we make mistakes. Because anyone can make mistakes and anyone can learn some type of lesson. But the problem is, and what we want to try to do is learn the right lessons when we make mistakes. So when I bought into Bitcoin for the first time, I had some people telling me to buy Bitcoin. I read some articles, they all seemed very bullish. So I bought into Bitcoin as we were going up here into the hype. And that was clearly a mistake. And one that I have never forgotten, and also one that I've been holding all of this time. I did not sell my position in Bitcoin when I bought in over here. I held on to it this entire time. I did not buy more Bitcoin as we were going down as well. I realized a few different things. And one, I did not know exactly what I was buying into. And two, I didn't really know where it was going to go. I didn't know if it was going to be worth a lot more or if it was going to be worth a lot less. So it took me quite a while to get my wits around if this is something that I want to be investing more into, or if this is something that I want to basically unload in the future when price gets back to my cost basis. So it took me well over a year to figure that out. So I started buying more Bitcoin around this area, and especially after the pandemic, I realized that I wanted to buy more Bitcoin to give myself more of an exposure and a hedge to inflation. And I also ramped up my position once we broke this technical line right here. So there were a few lessons that I learned here and some growth that I made along the way. And at the moment, my position on Bitcoin is quite positive despite the mistakes that I made in the past. Now, what are some of the moves that I made recently or in the present that was kind of based on the mistakes I made with Bitcoin in the past? So with Hyliion stock, I bought in pretty low before all the hype went into the stock, sold it when we got pretty high, not all of it, but some of it, and also rebought into it as it went low. I had this idea of what I wanted to do with Hyliion stock based on bubbles of the past, hype from the past. Now, the question is that I want everyone to be aware of. This is not so much of a buy low, sell high mentality that I'm trying to present here. Anyone obviously knows that this idea of buying low, selling high would be amazing and is a great thing, but it doesn't always work like that. And that is not what I'm trying to talk about here. I do not think buy low, sell high is that important. I really don't think buy low, sell high is a really important principle, and I really don't think it even means that much. It is not all about buying low, selling high. That is not what it's all about. It's about risk management. So, for example, buying a stock, let's say it's at $10, and you are aware of the risk involved. The risk involved is that this company could go bankrupt, and there's a significant chance because the company is literally just starting out. Now you have this potential of this company going to 100 in the future easily, well over 100. So you have this risk and reward at your fingertips. And let's say this stock ends up going to 30 really quickly. Now you still have this risk of this company going to zero. Nothing has changed there. So you can decide maybe I will sell out of this position now. I made 200% in profit. This company could still go to zero. So there are some risks involved with that. So I'm going to sell it right now. Now, the question is, if you still like the stock and you still want to be invested in the stock in the future, will you only buy it if it goes lower? This is the idea of buy low, sell high. It's not necessarily what should drive you to buy a stock. If this stock, for example, goes back to 10 and nothing's changed, obviously you'd probably want to buy back into it. You'd made that same decision back in the past. Why wouldn't you make that same decision in the future if it still has a prospect of going well over 100 and the risk of bankruptcy hasn't increased, it still remains the same? Now, the more complex question comes when the stock in 6 months or whatever in a year ends up going to 50, for example. That's the interesting question of will you buy back in or not? And you obviously don't want to buy back in because of FOMO. The reason why you might want to buy back in, though, is if bankruptcy has been taken all but off the table. For example, if the fundamentals of this company and the story is completely intact and the risk of bankruptcy has gone down substantially, then the risk of going bankrupt is basically zero. And the chance of this in the future going to 100 has gone basically, this is where it's going to go. So if the stock currently is at 50, why would you not buy into that stock that is going to very likely go to 100 versus buying a stock that was at, whether it was at 30 or $10, that probably would go to 100 plus but also has a high chance of bankruptcy. You have just traded that risk for an asset that is at $50 that's most likely going to go to over $100 with very little downside risk of going to zero. Obviously, the stock can go back to 40, obviously it can go back even lower, but the risk of it going to zero is taken off the table. That is the scenario where you'd be smart to buy into that asset because if you could buy into something at 50 today, and in a year or two it goes to 100, that is a great return. So the key here is not just this idea of buy low, sell high. That is not what it's all about. And it's also not about even selling high. If you bought Bitcoin early on and you saw this whole thing happen here, this could be just a blip in time when we eventually go see a lot higher prices. I'm not saying Bitcoin will go so much higher. I don't really know. But the main point here, if you looked at something like Tesla and you bought in when it was in the 40s or 50s, you could have sold out when it got to 100 or 200 even. That's fine. But then the question is, would you buy back when it got to 250 or 300? The idea here is if the story is still intact and the company is stronger than it was before, there's no real reason not to buy in to the stock just because the stock price has run up. And I'm not even an advocate for buy low and sell high in general. I think it's good to buy into an asset that you believe in long term and essentially never sell the asset. If you think a certain stock will go to a certain value in the future, it is almost best to buy and never sell the stock. And that could be the most profitable and lucrative thing that you could ever do. And especially if the fundamentals of a company have been improving. More products are coming out, more market share is being gained, the risk of bankruptcy has been taken off the table, and all of these things are looking brighter and brighter for the stock. There is almost no reason to sell an asset just because it's winning. Be aware of more speculative plays, companies that are more proven and have a lot of potential, or even older companies that have been around forever and that will probably never go away. For example, maybe like a McDonald's or a Coca-Cola. And if you want to be invested in some of these stocks, just because the stock price went up more is no reason to not buy into the stock because these stocks have very little risk of bankruptcy. So for example, like a Coca-Cola or a McDonald's, you kind of want to buy into them based on technicals where you see the stock price going, buy and accumulate those shares based on where you think are good buying opportunities. Because basically, for those stocks, all the fundamentals are kind of baked in, so you can use technical analysis to plan out where you're going to buy and keep on accumulating those shares. With Tesla here, you can use the same kind of strategy, but just be aware of stocks that go up massively in a short period of time. If there's news that comes out that's pretty bad for Tesla, this stock could correct pretty significantly. One thing with Tesla that I'm kind of interested in, it doesn't impact the fundamentals at all, but it would be pretty interesting to see if we get an inclusion to the S&P 500 soon. I think they rebalance maybe sometime in December. So that would be pretty unexpected and a pretty significant catalyst in the future. Well, I'm going to end this right here. I hope you guys got some value from this content, and if you haven't already, smash that like button, subscribe to this channel for more content like this, and I'll catch you guys in the next one. If you want to support this channel and get an amazing brokerage, here's my referral link to Etrade. I also included it in the description down below. And Etrade is just an amazing brokerage. I definitely like Robinhood as well, but Etrade is definitely something I feel more comfortable with promoting for newer investors and for experienced investors. It's just a solid platform with a lot of resources. I'm really into Robinhood as well myself, but I know that it's easy to not be as disciplined with Robinhood, so I feel like you gain your discipline with Etrade, with that platform, and then go into Robinhood and knock yourself out.